Welcome to the Financial Quarterback with your host, Jim Lineweaver.
I'm Jim Lineweaver, your financial quarterback since 1993. Ohio residents created a record number of new businesses in 2020, and that trend is continuing in 21. If you have a significant retirement account and want to start a business, one thing you may want to consider is a rollover for business startup, or ROBS. So here to help me discuss the pros and cons is Director of LFG Tax Services, Mark Sipos.
Hi, Jim. A ROBS is an alternative form of business financing for small business owners. You can use your own retirement funds that you have right now to finance a startup, acquire a new business, or grow your own business.
So how do they work?
First, you have to start a new C corporation. Then that C corporation starts their own retirement plan. You roll over your existing IRA or other retirement funds into this new plan, and those funds are used to purchase the C corporation stock. That stock then generates the cash flow you need for the new business.
There are some pretty specific requirements you have to meet when you're doing this, aren't there?
Yeah, there's several. First, you have to have an eligible retirement plan to begin with from a previous employer. Roth accounts and accounts at current employers do not qualify for this. Second, you have to have at least $50,000 or more in this account. And last but not least, you must be an employee of the business and receive a salary.
So this can be a great strategy for someone who has always wanted to start their own business. But like any financial strategy, there are also pros and cons to it, isn't there?
Yeah, some of the pros are you don't have any debt to repay back because the money's already in place. You do have control over your retirement funds more so than in the market. And also the corporate tax rates right now are a flat 21%, and that could very well be less than what your individual tax rate is currently.
But you're essentially betting that your business will succeed and your retirement account will be replenished by the new business. However, according to the Bureau of Labor Statistics, almost 2/3 of new businesses fail over the first decade.
And keep in mind, you also are going to lose any potential gains the money would have made in the market. There's also an increased chance of an IRS audit because they really look at these type of transactions closely. Finally, the planning and the administration of these plans can be very difficult. The IRS is constantly changing the rules and the way they interpret them, and there's a lot of updates that you have to comply with.
And other drawbacks include the fact that C corporation earnings could lend themselves to double taxation. And also, if you have employees in your business, they must be eligible to participate in the new retirement plan of the C Corp.
It can also be very expensive to set up, going into the thousands of dollars. And most charge a monthly administration fee that's on top of that as well.
But if owning your own business or franchise has always been your dream, and you've done your research and have significant experience in your industry, ROBS can be a great path to fulfillment and your financial freedom. But if you have questions about your business, finances, or just want a second opinion, give us a call.